First of all, I think you should first go to work at a really interesting place. Uh, it could be a hedge fund. It could be, I like value investing, so it could be a value-focused investment manager. So that's what you call the buy side of the street. Or it could be on the sell side of the street at one of the banks or brokerage firms. Um, I think you'll see a lot of stuff. You'll see a lot of stupid stuff, but you'll um, you might meet some people who have some lessons for you to learn. You'll be exposed to things. You'll maybe be helping invest money, and it won't be your money, so any errors that happen won't be on your account. And essentially, just act as a sponge and learn as much as you can. And I think what happened with me is eventually some things will make sense to you, and a lot of things won't make sense. And ultimately, you'll set upon kind of a personal investment philosophy. And once you have that, and then once you've kind of practiced investing money, it's best to make your errors when you're young and you don't have that much money, and you learn the skill of making money from the marketplace. I think that's something that nobody can take away from you ever again. So as long as you have a bit of capital, or you have somebody who will kind of back you and give you some capital, then I think you can kind of write your own story from there. But I think the industry's changed a lot since I got involved with it. I think it's a lot more buttoned down than it used to be. I've worked mostly independently for my entire career. I did work at a mid-sized brokerage firm when I started off, and that was an experience. A lot of crazy characters, a lot of conflict, because myself and my ultimate partner were always pushing the kind of boundaries of what we were supposed to do in our area versus what other people were doing in their area. And I have worked at a bank, which I found to be, after being an entrepreneur and having my own business for 20 years, working at a bank was a very challenging thing to do, in the sense that you get a lot of people who really don't know what they're talking about trying to tell you what to do. And the bank structures itself for the lowest common denominator, the worst possible employee they would have. So a lot of the rules that they have in place are cumbersome and difficult to deal with. But yeah, you just work towards finding an investment philosophy that works for you, and practice when you don't have much money. So if you lose money, it's not going to impact your future to a great degree. And then take that skill and apply it any way you want. You could be the principal of your own firm. You can partner up with a group of people and do something. You might work within a big institution and be the star trader, portfolio manager, whatever, and that may work for you as well. It depends on your relationship with people and how you work within a structured environment. It can lead to a very rewarding career. And the nice thing about it is that that career doesn't have to end at 65 or whatever mandated retirement age there is for lots of other businesses. When I was a young man working in the brokerage business, there were lots of guys who were 80 years old with fedoras and three-piece suits, and they were still very active as stockbrokers. And I just went to a memorial this past weekend for a friend who was 76 years old and still very active as a portfolio manager. So it's an open-ended thing. You can create a lifestyle for yourself where you can continue to work for as long as you want. You can balance it out with your other interests. It can be a very rewarding experience.